What's up, guys? It's February 13th, 2024. You're seeing this is Valentine's Day. Happy Valentine's Day. I don't have a Valentine's. I hope you guys do. Big gap down. We had CPI in the morning. Yeah, really good day. It was really cool to just see how the Brooks methods played out. I was reading the trendline book, the blue book, reading about trends and trend lines. And this was a straight up setup. I was looking for it and it came out, and I will explain it here. So, gap down, huge gap down. I actually bought this bar. I bought that bar. The reason I bought this bar 3, was because there's a very small percentage that after a big gap down, if bar 1 is the opposite bar, it can be the low or the high of the day. I'm trading the micro, so I took less than a $25 hit. But I was willing to scale in really aggressively if it turned around right away. So that's kind of what I was looking for, like a low hold so I can scale in. But I got stopped out. First 6 bars of the day, bad follow through bar 1, good follow through with the rest of the bars. It was a small bear flag, and it kind of was like a dribble. If you think of leg 1, and then this being the first push down, so leg 1, leg 2, and leg 3, and there's your wedge bottom. That goes 2 legs into the EMA. When I was talking about a few seconds ago about this is a Brook setup, it's a midday reversal. Strong. Whenever we see a strong gap down or gap up for that matter, and it looks like it can continue, usually in the middle of the day, we can tag the EMA. We have some sort of double top in this case, and it sells, and we can see it. Excuse me, I just got totally tongue tied. So we have a trend continuation midday reversal right here, and our first PT would be the low, and then the next PT is going to be a measured move of this range. Your full PT could be this range here, but that's a lot. I think that's like a 60-point gap down, and then asking for another 120 points in one day is a lot. However, what did I want to say? I think it was a really good day to trade. Leg 1, leg 2's market cycle we were trending, we were breaking out. Context for where the trend ended was great. Scalp to the open on a range day. It's not really a range day to me. I count this more as a leg 1, leg 2 move. There. It was not met, but very close, and that's a lot of points to ask for in one day. I hope some people swung if you caught this breakout and you swung it till here, that was entire last week's range, so that's really cool if you caught that. Okay, so we are here at that midday reversal, and we sell. We're holding below the 50%. This blue line here is last week's 50% level, and we broke past that. And since we broke past that, the bull's first objective, would be to reclaim the high of the day, reclaim the 50% level, reclaim the next 50%, the 50% level of this range, reclaim the EMA, yesterday's low, and so on and so forth. But ultimately, the bulls failed under the EMA, keeping a big bear gap open here. And they get their 2 legs now, leg 1, leg 2. It's kind of extended, kind of a hard, I wouldn't say it's a hard hold, but from a leg counting perspective, maybe you get out at the lows. I don't even think that's a bad trade if you get out the lows. Leg counting, so we'll start over here with the leg counting and then go into the market cycle. I was measuring legs and how this so here's the first leg. I'm trying my best to have these videos structured, focused, and quick so you guys can get the same type of information every day, and we can start building upon that. So it's going to be first 6 bars, leg 1, leg 2's, where we are in the market cycle, and then the daily and 45-minute chart. I'm going to try my best to keep that routine until I think otherwise, but from what I understand, all we have to do to become profitable is understand the market cycle, understand the leg count within the market cycle, and then calibrate our expectations towards that. Calibrate expectations it's a quant systems term coined by Ali, and all he means is calibrate your expectations. If you expect the trade to be a breakout and you buy a breakout, the follow through ends up being an opposite bar, change your expectations, get out. It's just straightforward. Just calibrate your expectations. So I don't know where I was going with that. Leg 1, leg 2 is met by the bears, and then I pulled from here to here and was looking for a leg 1, leg 2 move. And you can see it failed if we put it all the way to the bottom of this bear bar. And then I was thinking, well, if there's a good trend line break, you want to see an outside bar. And this wasn't an outside bar, but it was close enough and had outside bar like tendencies. So it came down. I don't know if you guys were watching this bar, but it came down and it surged up and closed at its high after a trend line break, after a strong move down. I think this would be good. Maybe you want to see a retest, maybe you don't. But I think this would be good for long into the EMA, and this is where I made most of my profits today. So there's your first leg 1, leg 2, and there's your reason to get in is because it's a wedge bottom, outside bar, trend line break. And that's what brings me to the idea that maybe I should measure it from here because that's where the trend line break started. And look, that move was met to the tick. Lately, I've been front running my trades, so I don't know if you guys can hear my dog, my bad. So what I mean by that is, like, if I was to pull it from here, I most likely would have got up as this bar was turning up. But a part of me just wants to let the trade play out. So I want to be as accurate as I can, and this is where the breakout took place, and that's kind of where the measured move happened. So to me, it matters, and that's where I would pull from. Because people in this world that trade, they are so accurate down to the tick. Why can't we be like that? So screw it. It's gonna get hard. Burst reversal after a strong trend line break. Here's a one trend line break here. Scalp to the HOD. Trend line break here. Scalp to the high. Every trend line break is a bull flag, and then the major trend line break would be this bear bar, and you go for your leg 2 move. Leg 1, leg 2, leg 3. I was counting opposite bars, so what I mean by that is leg 1, opposite bar, leg 2, opposite bar, leg 3, opposite bar, leg 4 or leg 3, however you want to count it. The idea is bullish pressure is dying, and it's dying after a measured move got met. So that's context to take profits because the measured move was met, so people are looking at that as a PT. We're at the EMA, which is most likely going to be resistance after a strong trend, the first pullback into the EMA. After a strong downtrend, the first pullback into an EMA will fail. This is also a first reversal. Same concept like this. First reversals fail. First reversals fail. So good context to get out. Multiple reasons to take that long and get out. It's a mean reversion trade. Breaking out under the EMA. Here's a leg 1, pullback leg 2. Kind of a bad opposite bar pullback. However, if we take it down to here, and take it down to here, that was met quickly, really fluid. EMA still acting as resistance. Then we could take a bigger move from here to here because there's another opposite bar, put it at the top of that pullback. It was met. And we could take a breakout perspective, trade here. If you want to take the breakout range, which I think would be the cool trade to take, you could hold the longest. We would enter this trade as it's breaking out here, and this would become our target. And when we're this close to the target with this much bear momentum, that was bad. This much bear momentum, I would hold for the low of last week. The purple bar's low of last week. Purple bars are the low and the high of last week. So that's the high of last week. That's the high of yesterday. But yeah. So leg 1, leg 2 worked great. The breakout worked great. Here's another leg 1, leg 2, which is. So there are so many leg 1, leg 2 moves today. I really hope you guys caught something. I hope these are working. Here's another leg 1, leg 2. The breakout into the EMA. Here. That was met quickly. What happens if we extend it and put it back to here? That was not met. But what if we take a breakout measured move? That was met. And then this target here, I was not expecting that. But it looks like the bulls were trying to get to the open. Looks like they were trapped. If you want to count that as, I can't remember exactly where it opened. Maybe it opened here, maybe it opened there. But the bulls wanted to get to this area around bar 1. And we're at range lows. I think this is a really good buy. This is an outside bar, trend line break. EMA is an adaptive trend line. And it broke the trend line and went for a measured move. You could almost be in a measured move all day today. Not all days are like this. Where are we in the market cycle? That's an interesting question today because today had trending behavior. But if you want to take the overall context, last week we were in last week's range. So I'm going to tab over to last week. short. Shit. Excuse me, I didn't mean to swear. I don't know if you guys can hear me swearing. Is this the 45 minute? 45 minute daily, changing it to the weekly. So this was last week's range here. This high and that high. We popped above it and sold all the way down. Really bad for the bulls. That's not what you want to see, you know. 2-bar reversal. I was like real happy when I saw the trend line getting respected. I was already out the markets just watching, like, is it gonna bounce or is it gonna break? Is it gonna bounce or is it gonna break? I thought that was really cool that it got respected. It overshot into last week's low and bounced right back up, and that makes sense because we're in a range. So from a higher time frame perspective, market cycle is we're range bound. There's no doubt we were in last week's range. We're at the range lows, buy low, sell high. On the 5-minute time frame, to me this is a trend. It is now that's interesting because it is a trend here, but the bulls were making money at new lows. They didn't make any money here. They made a little bit of money profit taking, and they made money here. So when both sides are making money, it's more of a channel than a trend. But this was a very tight bear channel, and I don't think it's worth getting long unless you were on the long for the pull. And if you were to get long here, what is the setup? We're not breaking out through the EMA. We're not. I mean, you could buy this bar if you want and scalp it into the EMA. You buy this low, buy this high. You could do that. But I'm thinking from a leg 1, leg 2, a breakout perspective. Maybe you buy this bar for the breakout. I understand that. But until here, this is the first good close we got above the EMA. Maybe you buy this bar too, but that's also 3 pushes up, and the bull bars are getting weaker, and the trend channel is getting steeper. See how it's getting steeper? So something's gonna happen. Resistance, sell, leg 1, leg 2, leg 3, leg 4. Here's a wedge bottom I was looking at. Like push 1, push 2, push 3. Another wedge bottom into support. Outside bar, get long. So yeah, where are we in the market cycle? On the bigger time frame, we are range bound. We're still within last week's range. It's the middle. It's Wednesday now, so we'll see what happens. I'm saying this as it's Tuesday, but you guys will go and watch it on Wednesday. Trend lines being respected. That's great. Leg 1, leg 2s are working. You could be in a trade all day with the market cycle. I mean, with the leg 1, leg 2s, as long as you understand the market cycle. There's a scalp. You could scalp anything. You could short for any reason. Short the pullback, short the breakouts. Hope you guys made some money. Thank you for watching. Thank you for all the comments and the support in the comments. Hope you guys are doing good. Cherry Chick, hope you're doing okay. Jared, hope you're doing okay. Phoenix, everybody, thank you for the comments. Have a good one. I'll talk to you guys tomorrow. I'll drop these every day at 3 p.m. I'll talk to you later. Bye.